and Managing Director at the New India Assurance. And Girija, hi, morning. Help us understand in terms of your earnings, what were the key drivers between the 80% year-on-year increase in PAT during the quarter gone by?
So basically, in this quarter, the main drivers were that we did a lot more on property. The fire growth rate was much higher. Most of the lines did well except motor, and whilst there were a few claims like Air India claims and others, but the expense ratio was much lower this time. It's a combination of factors because the investment income also was very good in this quarter. So because of all these factors, we had a better balance end of the day.
Right. And what about market segments? What contributed most to the increase in your market share from 14.65% to now 15.51%?
I think all lines contributed significantly, but one of the biggest growth areas was fire or the property business for us in this quarter.
Right. The other thing I also wanted to understand is that despite the strong top line and PAT, the combined ratio remains elevated at 116.16%. What are the key levers to bring this down to, say, your earlier 113% target?
And this quarter, we had the Air India claim also that has been, provisioned for in this quarter. And apart from that, we had a few claims in liability and miscellaneous. The health claims went up because of, this quarter, particularly the infectious diseases, the incidences had gone up. And I think that has reflected in the health claims. So motor TP anyways is always high because of the pricing issue. Motor OD also remained high because of, we have been trying to control the motor OD claim ratio, which we'll consistently work on going forward. Because of all these reasons, we found that the investment returns are very good this quarter, and management expenses were also low. So because of all these two factors, we were able to contain the combined ratio at a stable position.
Sure, and Girija, you did mention the Air India crash claim, the impact that had on your numbers this time around. And as unfortunate as that was, could you help us quantify the impact that this claim has had on the overall claims ratio this time around?
Air India is normally very heavily reinsurer driven, and the net impact of the Air India claim is not very alarming, but even then it does have an impact on our performance for the quarter.
Right. Girija, with health ICR rising to now 108.9%, how will the company balance medical inflation with regulatory limits and premium hikes? Is there a roadmap to eventually insource health claim settlements as volumes scale up?
Yeah, the growth in health insurance has been always been there every year, with each passing year. Although on the group Mediclaim, we have been shedding off, the groups that have not been, that are not acceptable to our pricing. We have not gone ahead and provided. But even then, the growth has been, been very stable in this line of business. Now, as regards the hospital charges, it is an unregulated area, and it definitely needs, regulation in order to see that we are able to make health become more sustainable, be able to price health more effectively. So this area still remains a matter of concern at the General Insurance Council level. I think all the insurers are taking up this particular issue, and there's a lot of work going on, and we expect that maybe during this year we'll find some solution to this. If there's a health regulator, maybe that could help us. Hospitals getting empaneled to a cashless method of payment could also help us, though the insurers are onboarded and some of the hospitals are, majority of the hospitals are not onboarded onto the system, and that's where the concern is. So with all this, we hope that once these corrections happen, we will be able to see better the health portfolio being more stable. Till then, the health inflation is definitely a matter of concern, and whatever think we do, what in our observation in the past few years, the inflation has beaten our estimations.
Okay, and Girija, before we let you go, could you help us understand if we can continue to expect the similar growth levels going forward, any near-term outlook that you have, and your outlook for FY26 and 27, of course?
Yes, so the growth will remain at the levels that we have been growing in the first quarter. We expect to grow similarly and keep this momentum on. That is what we are targeting for. It obviously then depends on the scenario out there, how the industry behaves, how the other insurers also work towards their respective goals, and accordingly it will get impacted. But we are prepared to and we are targeting this level of growth throughout the year. And for FY26 and 27, grown in almost all areas except motor OD this quarter, and in fact from the second half of 25 itself, we have shown a upward trend in growth that continues in a good way in the first quarter 26, and the same momentum will be kept going on in the entire 26 and also 27.
Okay, so that's the management of New India Assurance. Girija, thanks so much for joining us and highlighting the quarter gone by as well as your